Something else that we have talked about is just the growing negative interest rates worldwide. I mean, what's even the argument for doing that, and why do you think that's going to be problematic?
It's one of these things that they view it as a short-term solution, knowing that over the long term, it's devastatingly bad. So it's kind of like our national debt. It's the same thing. We've been talking about the problem for decades. Ross Perot ran for president in 1992, basically on the platform that we need to control the growth in the debt. But now here we are 27 years later, and it's massively bigger, and it still hasn't appeared to be a problem. Negative interest rates are kind of the same thing. What they're doing is they're trying to stimulate their economy through negative interest rates, and the banks and the insurance companies are really suffering underneath this policy. When you look at the bank stocks in Europe and the insurance company stocks, they've massively underperformed for obvious reasons. If interest rates are negative, how can an insurance company that has annuities that pay a positive rate, how can they possibly achieve that return? So it's pretty fatal in the long run. But nobody really owns these negative yielding bonds. That's one of the strange things about it. 97% of all the negative yielding debt in the world is owned by central banks and the financial institutions that they regulate that are then required, like banks, to own these sovereign bonds and the like. So nobody really owns them. I went to Japan a few years ago now, and I met with the guy that runs probably the biggest pension fund in the world, one of these Japanese public funds. And I said, I'm so happy to meet you. The question I've been dying to ask you, do you own any negative yielding bonds in your pension fund? He just laughed. He said, of course not. He goes, they're just owned by the central bank. So you have this weird circular financing scheme, but the consequence of the negative interest rates can be seen. Let's just use a big notable example, Deutsche Bank. You see the stock has been down tremendously for a long time, and whenever you get a rise in interest rates, not surprisingly, there's a little bit of a bounce in Deutsche Bank stock. It's rallied quite a bit from where it was at the nadir of negative interest rates. When Germany was at negative 70 basis points, Deutsche Bank stock was down at like 6 or something. Whenever you get a big rise in interest rates in Europe, you get a relief rally in Deutsche Bank stock. So basically, negative interest rates are fatal over the long term to the banking system. Negative interest rates in the United States are not coming. Okay. Jay Powell has said so, and for that, that's why he gets a C- and not a D or a D-, because I strongly and loudly applaud his statement that he just doesn't think we should take interest rates negative in the United States, because if the United States went negative with Japan negative and with Europe negative, I think it would be fatal to the global banking system because there'd be nowhere for capital to go. The United States is a tremendously large market, and so with capital not being attracted in Japan and Europe, at least it can come to the United States. Mm-hmm. And that's one of the reasons why the dollar has held up. So he knows that if interest rates go down in the United States and stay there, that capital destruction is going to be overwhelming. And so he has talked about saying that when the next recession comes, he's not a fan of negative interest rates. I'm sure we'll go towards zero. But he would do large-scale asset purchases, which he's already begun. He doesn't want to admit it. Right. It's kind of funny. You know, they call it quantitative easing because they didn't want to admit it was monetization. They said it's not monetization, it's quantitative easing. And now they don't want to even admit that it's quantitative easing. They want to call it, you know, I don't know, repo facility or whatever it is, as they grow their balance sheet by $300 billion, but it's still growing the balance sheet. But I applaud the fact that they don't want to go to negative interest rates, because I think that that would really turn the world into a dangerous place.